a look at the M&A market. I'm joined by McKinsey's senior partner, Michael Park. Michael, good to see you.
Nice to see you, Rhonda. Thanks for having me.
What are you seeing right now in terms of overall M&A activity so far this year? And put that in context with what we've seen in the past.
Sure. It's still very high, right? But the last 5 years have been pretty exceptional, and so it's gone down over the last 2 years, about 20-30% off the peak. We're seeing both smaller deals, fewer deals. But historically speaking, we're still at the top 20 percentile in terms of amount of activity. So we expect it to actually stay pretty strong. It's just that I think 15 and 14 were pretty exceptional.
How about regionally? What are you seeing in terms of strength?
Right. America's very strong, continues to be about half the activity, 55 some odd percent. Asia getting stronger, but still, frankly, relatively small, maybe a quarter. And actually Europe getting a little bit bigger, call it 30% or so, both inbound, kind of domestic, as well as kind of, frankly, a lot of American companies doing deals in Europe too, as they, frankly, take advantage of currency and trapped cash, those kinds of things.
In terms of industries,
Yep.
What are the hot industries right now in M&A? We've seen in the past, healthcare has been
Yep.
very big, technology, is that the same?
It's going to be a lot of the same. Healthcare, I think, is going to continue to be big. There's huge targets there, a lot of consolidation to come. Industrial, I think, will be big as well as we see different flows. And I mean, to be honest, where's growth right now, right? We don't know. It's kind of 1-2% as far as the eye can see. So these industrial companies are looking for growth, and they're looking at M&A. So I think you're going to see industrial going strong. Telecom is going to be big, TMT in general. A lot of activist pressure there. I think we're going to see a bunch of deals, as well as spin-offs and those kinds of activities in the next couple of months.
And what are we seeing from boards and management in terms of the desire to
Right.
really expand the footprint a bit?
I think that's the biggest change we see. It used to be, hey, let's go buy another company. Maybe we can do some cross-sell. Maybe we can take some cost out. We are seeing a big shift in how boards and management teams look at this. They're now saying, you know what, M&A is a core part of what we do. We got to get professionalized at it. And what we got to do is use M&A to transform ourselves. A lot of our clients are saying, we got to do something to change what we're doing. We got to optimize the core. We have to take cost out. And they're actually using M&A not just to kind of buy somebody's capabilities, but then use that to kind of change up what they're doing in their core business. So a lot of times our clients are coming to us saying, well, how can we use M&A actually to just kind of revolutionize how we're operating in our kind of as-is business?
And why is that more cost effective than trying to do it on the inside internally?
Yeah, I think it's a capability thing. I mean, you're right. Honestly, if you could just do this on your own, that would be the best way to go. But I think a lot of CEOs are realizing that's just hard to do. Everybody's locked into kind of a status quo. And there's nothing like an M&A event to kind of captivate the attention of the company, get people on their edge a little bit, and use that to drive some of the themes. You're right, it's an expensive way to go, but frankly, I think a lot of our clients are finding it the only way to go. So again.
What about on the regulatory side, especially in the US, if we have a change politically, we're not really sure, of course,
Right.
what's going to happen, not just with the White House, but with Congress. So what about regulatory concerns? Is there any sort of rush to get some deals under the table?
I don't think so. I think that everybody, at least that we speak to, thinks that there's no change coming, or at least you can't plan for it. I think whatever way the election breaks, I think people are pretty dim in what they expect in terms of change. I think it's going to be a lot of gridlock and status quo. That is what we're hearing. Nobody knows what to plan for, honestly, so I don't think it's going to change things.
You mentioned activists earlier on. How are those activist investors driving the M&A landscape?
I think they're going to continue to be a big factor, actually not because of what they do, but what they could do. Boards are on edge on this, management teams are on edge on this, and I think a lot of boards are saying, you know what, rather than letting an activist tell me what to do, I'm going to do my job and change the portfolio or push my management team. So even though the activists may not be as active, I think you're going to see a lot of the same type of behavior. TMT, a big place, I think continued in healthcare, maybe a little bit in tech, defense, a few places like that, but whether or not it's the activist fund, you're going to see a lot of them playing a role.
And what about private equity?
I think private equity gets a lot of press and certainly will be a big factor, but honestly, it's still in that kind of 10 to 15% range of deals. I think they're going to still be active. But when you see the corporates doing what they're doing, a lot of times the PE funds have a hard time competing on price, right? Because at the end of the day, the strategic has more ways to create value. And if the strategic is saying, you know what, I'm going to take this company, grow it, but also change the way I do business, they're able to pay more than a PE fund will. So, I don't think they go away, but I don't think they're going to grow from where they're at now.
And what do you think of deal valuations right now?
Still high and getting a little bit higher. I don't think we're at the, we measure something called proportion of overpaying. Which is a little bit of an outside metric to say how much are people paying for deals. It's high. It's not historically that high, though, so I think there's still room to go in terms of price.
What do you think might be the most surprising development to watch out for in the M&A landscape, say, over the next 12 months? I know you can't predict it, but if you can.
I think people will be surprised with the cross-border. I think with currency especially, I think you're going to see more U.S. companies doing deals outside. Honestly, Europe is going to be a target place, which, historically, in the last 10 years, we've said, hey, Europe, slow growth, not a whole lot going on, a lot of labor issues, et cetera. But with Europe being hungry for jobs, with currency being what it's at, I actually think you're going to see some growth there in terms of M&A, which is a little bit counterintuitive when you think about the political and economic environment.
Michael Park of McKinsey, it's been great chatting with you.
Yeah,
Thanks
terrific.
so much.
Thanks for having me.
For The Deal, I'm Rhonda Schaffler.